Hey everybody, welcome to the weekend edition of our financial news and economic update. Thank you for being here. Let's get started. Okay everybody, the weekend edition. If you've been on this channel for a while, you know how we do it. Sometimes we get a little bit weird on the weekends, a little bit off into left field, not too far off into left field, not out in the bleachers or anything like that, just a little bit off. Why not right field? It's always the left field. I don't know why, but maybe we'll get into the right field. Now, before we get started, I want to say a big thank you to Brandon. He sent me a tip, and he says he also works in mortgage underwriting, so I'll have to reach out to him. I actually used to be in mortgage underwriting myself, and I ended up taking a part-time position as an auditor, so it would be nice to get Brandon's perspective on it, so maybe I'll be bringing that to you here hopefully soon on this channel as far as the housing market goes and what kind of lending we're seeing. But just to recap some of what we talked about this week, we know that wages are only up 30 cents per hour year over year when you look at pre-shutdown, and that's not very good considering the big increases in the cost of living and these rising prices, with the inflation just seeming like it's running everywhere. We talked about the possibility of repo crisis 2.0. I don't think the Fed's going to have any problems handling this since they have endless liquidity at their fingertips. A big surge in homeless here in San Diego. I'm hoping to do some on-street reporting here very soon for you for that. There's a lot of other great channels out there that do that, so I don't make that a priority, but I'm going to be heading downtown here very soon, so I might bring you some shots from downtown. At the beginning of last week, we talked about the no credit score needed credit cards, so they're finding more and more ways to get people to spend money, including people that don't have any credit score at all, right? So when you're sending out all these stimulus checks to basically anyone, you need to make it easier for those people to spend that money. So it's no surprise that these no credit score cards are being rolled out now by several banks. Now it's looking more and more like this could be our future, with this representing here the guy in the green shirt, the U.S. population, with the mega corporations going more towards automation and robotics and AI. We could just be sitting back and scenes like this where this delivery bot is doing the work and we're just sitting on the side collecting checks. Now that sounds pretty good, sitting on the side collecting checks, unless you're not in a home like this man right here with no shoes. And without all of the stimulus programs and assistance and the moratoriums on rents and the stoppage of the foreclosures, you would see tens of millions of additional people basically homeless, or if you're lucky enough to move in with a relative, or maybe find some place to squat, in a home that you don't own. But it would be very, very dramatically different if we didn't have all these rescue programs in place, including the propping up of the banking system, which we know the Fed has the powers to do that. And the name of the game is keep the money flowing, keep lending, allow people to take on more debt, swiping their credit cards. And that can create the illusion that this economy is somehow recovering or even sustainable. But we know better. Let's get into some recent news here. Now, here's a chart that's been going around. Home sales actually tumbled recently here in the past 3 months, but these are just month over month numbers. We look at we look at the blue line here, we see that we're way up year over year. Now, this is being compared to at the beginning of the Great Recession and the Great Sickness shutdowns, so it's no surprise that we're up big year over year. So we'll have to continue to watch this trend. I don't take much stock in month over month numbers. Could it be the beginning of a bigger trend? Absolutely, because we're seeing very low supply on the markets, supplies of homes, that is. But that's actually only going to have a increase effect on prices, because the lower the supply, then the demand is going to further outweigh the supply. So you're going to see bigger bidding wars, more people battling for the same home with less supply on the market. And home building is taking a dive because of the high cost of lumber. And part of it is the labor shortage. A lot of construction companies are not finding willing workers. Let's take a look at some recent data on home manufacturing. Recent CNBC article, home construction sees the biggest drop since the pandemic hit. Here's why. Right now, first of all, housing starts, home construction, new construction is down 13% compared to just last month. And there's reports of about 15% of builders are putting down the concrete, pouring the foundation, but holding off on framing the house. And this is one of the reasons why home prices are now accelerating at the fastest we've seen in 15 years. Now, how long can this last? How long can prices continue to accelerate at these paces? Well, sadly, nobody knows, but it's not looking like it's going to end anytime soon. We've got a perfect storm of several different factors playing in here, causing these surging prices. One is low supply, and we just talked about how builders were holding back on building. We see supply chain disruptions. We're seeing labor shortages, spiking costs of lumber, which had come down a little bit here recently, but it's up big year over year. Right, so a lot of different factors being pushed together here, causing this mess. And now with more home shortages and home starts down over 13%, that's going to cause even bigger problems and probably more pressure higher on prices. Right, so lower housing starts doesn't mean that the housing market is doing bad. It just means that construction is slowing down, which is not good because that's going to further imbalance the supply versus the demand. And we're still seeing bidding wars like crazy. I just talked to someone who had their home purchased from them, their home sold in less than an hour of listing it on the MLS, and it was multiple offers in less than an hour. So you've got buyers sitting there hitting refresh, waiting for new homes to hit the market. And it seems like it's just an absolute insanity right now in the housing market. Now, just a quick update on the cost of lumber. Prices have fallen every day since May 10th. At right around that time, May 10th, they hit a record of $1,711. That's $1,711 per thousand board feet. But since then, prices have fallen every day. But even after the drops here in the past couple weeks, we're still up about 37% year over year for the cost of lumber. Now, something else to add to the mix here is we still have a lot of people working from home. Not everybody went back to work. There's still a big portion of the workforce working at home, and more people are doing home construction projects. And some people even making additions to their homes to maybe have a home office to work from, as a lot of people are expecting this work at home situation to be permanent for some companies. Right, so a lot of things happening right now, that's for sure, in the housing market. Right, also we still have mortgage rates that are very, very low. Let's take a look at a recent chart here. First, let's take a look at a long-term chart here to give you the big picture perspective on this. This goes back about 50 years. Now, if we go into a 5-year chart here, we see a bit of an uptick here. Since the beginning of the year, we got as low as about 2.6%. Now we're up right around an average of about 3% for a 30-year mortgage. Right, so nothing to cry wolf about, nothing that's going to bring the market to a halt or even change the direction of prices right now. And if we go back to this long-term chart here, we still see that we're way below where we were when the previous housing bubble went bust, when rates got up to about 6.5%. We're still way below, less than half of what we were back then. Right, so recap, endless liquidity for banks means more lending, more multiple bidding offers on homes, low supply, more people chasing after the same home. And I've been talking to a lot of people who have just been jumping into the housing market because of FOMO. And people think that things are different this time. Back in 2007, 2008, remember banks, they started being very afraid to lend because they weren't promised the guarantee, or anyways, of endless support and whatever it takes from the money printers. Now they have been promised that. The Feds came out several times, whatever it takes, as much as necessary, unlimited, that type of language in supporting the markets, including the housing market. So a lot of people are choosing not to fight the Fed. So I wouldn't be fighting the Fed. I wouldn't be shorting the markets. I would bet on more inflation, more rising prices. We did see a big sell-off in cryptos recently, and I went ahead and picked up some more, buying this dip, and we'll see how that goes. But fighting the Fed could a lot of times end up looking something like this. So nobody knows exactly how long this can go. The money printers, no one can predict what they're doing. If you are someone that works for the money printers directly or you've got inside information, please let us know down in comments. Otherwise, we see nothing but supports for these markets and a lot of things blended together that are going to create more demand for housing. But I'm just waiting to see how people are going to handle these tax bills with these inflated prices. These property taxes are going to be outrageous. Okay, we're going to wrap this one up for now. Also, quick announcement. Some of the outro music that you hear on this channel is now out there. It's been published on one of the YouTube channels. Not my channel, but I guess a publisher put it out there. So they're just instrumentals. They're not anything special, but some of you are saying, hey, that sounds pretty cool. What's the rest of the song? Link down in description for, I think, 2 or 3 of the songs. We're going to put out more. I've actually got about 70 or 80 songs, literally, that I have written and partially recorded that I've written through the years that I never put out. But I've recently got this digital audio workstation that has allowed me to re-record some of these songs. Again, no vocals, so they're nothing special, but they are down in comments to those people, not in comments, but down in description to those people that are asking about these songs. So thanks everybody for watching. Thank you for being here. Stay well, stay safe, keep stacking, stay prepared. Bye for now. Peace.